Good morning. It's the 7th of April. We are Signal Centre Talking Bull. I'm Joe, joined by Steve and Jamie. Good morning, gentlemen.
Good morning, mate.
How are
Morning,
we doing
guys.
today?
Oh, good, thank you. We're all in uniform by the looks of things, all in our
Yeah,
black
black.
uniform.
Come dressed as
Yeah,
Yeah,
referees today.
the men in
look at
black.
that.
Yeah, men in black, like that.
That's what we
Um,
do. We transport into the future, find out where the markets are, and then sort of transport back and tell you all.
yeah, and then we're just going to flash drive, just wipe your memory.
Forget all
Yeah.
that happened.
Only we've got the ideas, the magic. Okay, gents, let's get stuck into the latest headlines then, shall we? To start off. So, Fed minutes last night, and they emphasised the threat of inflation. The minutes yesterday recorded that all participants emphasised the importance of remaining vigilant of the danger of more upward pressure on prices, and that it would be appropriate to quickly shift the stance of monetary policy towards neutrality. Many participants stated that they would like to see a 50 basis point increase at the next meeting, and also remarked that one or more 50 basis point increases this year may be appropriate in future meetings, especially if inflation pressures stay elevated or if they intensify further. That led to aggressive Fed tightening being priced into the markets. Although the Fed minutes were hawkish in nature, they had already been a notable shift in market expectations and a surge in bond yields, especially after Brainard's comments earlier this week. In this environment, hawkish rhetoric has been priced in, and there was a small retreat in yields, with a dip in oil prices also providing an element of relief. The 10-year yield was just around 2.6% yesterday. Further central bank action, this time from the ECB. They were fairly dovish in their stance. The chief economist, Lane, stated that it was important not to overreact to inflation surging. He added that the bank can't respond to current high inflation and that the bank's orientation is towards the medium term. Lane has maintained a consistently dovish stance, and these comments suggested that the economic department will not be backing a tighter policy at this moment in time. So they've got a policy meeting next week. That's the only big central bank meeting actually this month. So we'll wait and see what happens there. This year we do have the French elections, and there's a bit of caution ahead of that. The first round of presidential elections will be held on Sunday. Market attention has been notably limited over the past few weeks, but there has been a spike in concern this week. President Macron has maintained a lead, but a dip in support for minor candidates has allowed the National Front leader Le Pen to pick up support and narrow the gap. The euro is likely to dip lower if Le Pen wins in the first round or comes very close to Macron. So we shall be watching the euro with interest over the weekend. Markets are also braced for a further Russian onslaught. The Russian forces have pulled out of the north of Ukraine, and there have been further allegations of war crimes against retreating forces. There have been further sanctions on Russia, including further action against the banking sector. There will, however, be strong pressure for sanctions against Russia's oil and gas sector, which will maintain uncertainty over energy price trends. So that's it for the latest news. Quite a lot going on today based on that. How's it affecting markets, Steve? What's going on the charts today?
Well, there's quite a lot going on actually, and it's sort of like looking back at yesterday. We were talking about the head and shoulders formations in a lot of the charts. We looked at the cryptocurrencies, indices, actual individual stocks as well. We could see that these sort of topping formations. The one I want to focus on today, obviously, is Bitcoin. I called this in the gun to head yesterday, which played out really nicely. I won't gloat about it, obviously. And but the weekly chart is now showing an evening star formation due to the sell-off we're seeing this week so far. So if negative price pressure remains constant as we finish off the week, obviously this runs from a Sunday to a Monday to a Sunday on this weekly chart. Then further downside we'll see in these markets. We looked at this triangle formation, which I highlighted on charts yesterday, and I said if it breaks, whichever way it breaks, go with the flow of it, and it has broken to the downside. So for me, resistance now comes in around about 44,500 in Bitcoin, and would look to sell again on a retest. It's really looking at where the next level to buy Bitcoin is. That's where most people are interested, as it is one of these long only assets, I suppose we'll call it, because really there's only investors in here. There's not many people hedging by selling Bitcoin on anything. So the real next trend line resistance, actually we can drag it right the way back to here. This will be a nice little level to watch, maybe even around about this level. It'll be a range of around about down towards the 37,000 area. 40,000's in between. 40,000 has been quite a key pivotal level before. So 39,500 to 40,500 should find a bit of support, and that would probably be where you want to sort of fade this initial sell-off we're seeing in cryptos. But at the moment, further downside in that. Crude oil, that gave up a lot of gains yesterday also. And we are looking at the weekly chart here. We can see last week was a sign that further downside was possible. That we had a rally at the start of the week, and this has given up those gains, and we're now looking to retest level down around about the 92.5 level area, which we saw the week of 14th of March. And yeah, I expect further downside on that. Gold is holding quite nicely at the moment. A little bit of a safe haven drive or firmness in here. Nothing really to sort of give me any real flow or ideas, although on the 4-hour chart, I'm still looking at this head and shoulders formation, still looking for that to break. The neckline is an ascending neckline. It's like an upward sloping neckline on this head and shoulders formation, and when we get the break, that will be the measured move target. We measure from the head to the neckline and we extend lower, and a break of there and a clear break of the 1890 to 1895 level in gold would have me concerned. Until then, it'll be a case of buying dips in front of here, and looking really at resistance, looking to sell into resistance around about 1965. On the indices side of things, we looked at these head and shoulders formations yesterday. Don't know why that's up there. And they had a clear break of the neckline. They've also broken the right shoulder neckline support coming in at 14,720, and it had a really nice breakthrough there. The measured move target of this move should have been somewhere around about, well, it'll be lower than where we are, or where we got to, around about 14,170, around about this swing low here. What's that? 14,190. So that would be the measured move targets. It made a big chunk of a move towards there and looks to be stalling ever so slightly here. So potential for maybe a pullback. On the Dow Jones, we've also seen this break of the head and shoulders formation. And again, let's bring a measured move into it. The sort of move we'd be looking for is a move down to 33,655. We also like to line these up with, is there any Fibonacci? I'll take the Fibonacci from right down here. That would be around about 50% retracement. If we're to take this level as the start of the upward move, again, close to 61.8, and this will probably hit the 61.8. Yeah, if we're looking at this as the impulsive move higher, corrective sequence to 61.8, just a normal correction in any market. So yeah, although we're seeing a little bit of a recovery at the moment on the short-term time frames on the indices, further downside is possible. But yeah, a bit tricky at the moment for this this morning.
Nice, Steve. Thank you very much. Let's take a look at some FX markets then. Just share my screen. So looking first up at the dollar index, still looking pretty strong overall, trading in this bullish channel. As we can see, we saw a decent breakout to new highs a couple of sessions ago from this sort of consolidation pattern. We are approaching the upper end of the bullish channel, and also a 78.6% Fibonacci level and a measured move of this double bottom pattern that played out a number of months and weeks ago. So approaching a very key level of the 100 mark on the dollar index, and we have to go back to May 2020 was the last time we saw that level, and that was the initial reaction to the pandemic kicking off. So yeah, important level there for the dollar index is fast approaching and showing no signs of slowing down. A little bit offside today, but nothing too drastic. We have seen some pretty substantial moves higher in recent weeks on the Aussie dollar. That's obviously heavily linked to commodity prices, but that was also accelerated by the central bank discussion the other day from Australia. But it seems as though that's run into some pretty key resistance levels and now in the process of reversing. So maybe some opportunities now to fade into these gains or look for some short selling opportunities on anything linked to the Australian dollar. So this is against the Canadian dollar. As we can see, it's rallied into these key levels here around about 94.60. If we look at Aussie Swiss, I mean, Swiss overall still remains pretty weak. So that's probably not a great example to look at. And a similar situation with yen. But if we look at Aussie versus the US dollar, that looked to be breaking out of a very important resistance level there at 75.55. But we've seen a very strong reversal posted over the last couple of sessions that actually hit the measured move target of this double bottom that's played out here and then reversed pretty sharply off the back of that. Further losses yesterday and looks to be moving lower again today. So have we seen a false breakout here or rejection of that level, which could maybe lead to a bit of a correction lower following this really sharp move to the upside? So that's one to watch for me. If we take a look at the euro versus Oz, that's showing some signs of bouncing following a really horrible move lower. Euro obviously going to be in focus over the next few trading days, particularly with this French election going on at the moment. Although Macron's in the lead, if the National Front leader, Marine Le Pen, can make any gains on Macron, then that may have a negative impact on the euro. So we'll be keeping watch on that. Euro Swiss, not much going on there as you'd expect. Euro Sterling looked as though it was maybe forming an inverse head and shoulders here, but I'm pretty close to sort of calling it quits on this, to be totally honest. We saw a breakout here. It looked as though it was going to stick, but then we saw a massive reversal posted on the 31st of March, and prices have continued to sink ever since. So going to throw that away and still looking for lower prices on that in line with the dominant trend. Need to see more evidence of some bottoming price action taking shape on that. Finally, let's just take a look at cable. Obviously, dollar remains persistently strong. Not really much going on here in the last few sessions or so, but overall the trend remains bearish and we're still looking for lower prices down towards this 50% Fibonacci support level at 128.46. And that's relevant because it's the 50% move of this entire pandemic up move on cable. So quite an interesting level there to look at. As you can see, we've broken down through the 38.2 and that now seems to be acting as resistance. So still expecting lower prices there, obviously coupled with a stronger dollar. So that's it from me. Jamie, over to you for some stock action. What's happening?
Cool. Yeah. Thank you, Joe. First, we're going to jump into Novavax, which we highlighted yesterday as forming this descending triangle continuation pattern. We had a strong candle here, a breakout candle, and yesterday we did have some follow through. We'll drill this down to a 4-hour chart. So you can see we really did at the start of the session really get down. I think it was down as much as 8% at one point, but there was some buying into the close. But still, nevertheless, a negative day, which is kind of what we expected from the indices in general. But this stock particularly, we thought would have some follow through. So pre-market at the moment was 64. We're not much different from where we closed, but I wouldn't be surprised if it kind of kept moving lower. To be honest, it's not looking very healthy at the moment. We'll jump quickly into AMD. Again, this highlights what I always like to go on about is support and resistance levels, and previous resistance levels, which it was back in January, becoming support here in September, and then again in the last couple of months as well. We're moving back towards that level. We gapped lower yesterday. We've had 2 consecutive gaps lower in the last 2 weeks. So it looks likely we're going to have another test of that level, and we'll see how price reacts. It's a very important level, as we've highlighted before. It's not only a key support level, but it's a key psychological level of being about the $100 level. So we'll have to see how price reacts with that, but certainly one to keep an eye on. What else have we got? Bank of America, no, good. We're going to jump into Lloyd's, and the reason I want to highlight this again, the same stuff I love. This was a support level, a really important support level of this £40, we're in pounds, yeah, 40-50 level. And yesterday we had this what looked like it was going to be a really negative bearish candle, which to an extent still is, but you can see that there was a real big level of buying support at this key level here, which actually ended the day looking like a more of a bullish type candle. As of yet, we haven't had too much movement on it today, but it went straight into this 41 level that was previously highlighted. So I thought that was worth looking at. I was going to quickly highlight ITV. Nothing more than just I didn't see that this earnings back in March, but I thought it was worth kind of highlighting to highlight the importance of having good risk management and understanding if you do own a stock when the stock's earnings are, because if you kind of held ITV into earnings, you would have seen, let me just get this out, in one trading session you would have lost 27.5% of whatever you'd put into ITV. So nothing more really on a technical basis. I mean, you can kind of see again, actually looking a bit closer, kind of went straight into the support level again. So I guess there is, but this was more to highlight how important it is to kind of be aware of the key events that are happening in the assets you own, because they can be really fast moves that can cause you some damage.
Yeah. Trading View makes that pretty simple, right? You've got all these keys at the bottom. You've got earnings, dividends.
Yeah.
So make sure you got them on your charts.
Yeah, keep an eye, especially for the ones which you own or you think of owning. And you can see again the volume, which is not surprising on an earnings day, really did pick up. I get a lot of people trying to dump their positions. So from a technical perspective, I wouldn't be surprised if this kind of does move back into this £70 level.
Pence.
70 pence, pardon me. Pound pence, because it's looking, it's still looking quite weak, and we did get a bit of a rally, but yeah, I'd expect this level to be retested. Lastly, we're going to jump into what's this? NatWest.
NatWest.
Yeah, another banking stock. Again, just highlighting these key levels, and it's the same thing I highlight on every single chart: is where has price previously found support, and to me, that's where I look to set my key levels and look to find some kind of confluence when I'm thinking of creating an idea. And as you can see, this was actually at the start of March. But I picked it up today. We had this support level previously here where price kind of found a low before moving higher in July. And after this really negative set of weeks in the beginning of March, we then had this support level found again at 480, 490 level. The other one to watch, the other key level to watch for this stock is this 540 level, which it found support at a bit before, and price is kind of oscillating around there. So it'll be interesting to see how price does react. I think if we get a break of that level, we can expect to see these this 480 retested for a third time. So that would be interesting. At that point, we're kind of getting a bit of a head and shoulders pattern if it does kind of come back down and test here. So one to keep an eye on if you are holding or interested in NatWest.
Nice one. Thanks, Jamie.
Well done, buddy. Okay, gun to the head trade. So this is just to refresh everybody that's watching the stream. Each of us pick a trade idea that we would back right now on the video. So this is live. Each idea must have a stop and a target. Each of the ideas must have a risk reward ratio in excess of 2 to 1. All the ideas are placed at market. The trade ideas expire at 9 p.m. or when the stop or the target is hit, and we maintain a spreadsheet of performance to see how these ideas play out. And I'm delighted to say that yesterday Steve absolutely nailed his Bitcoin short. Just under 1,000 pips taken out of that for a 3 to 1 risk reward ratio return on that trade. So congratulations, Steve.
Nice, Steve.
Jamie, you had a 60 tick win on the Dow. I think there was a bit of volatility around the FOMC, which impacted both of our trades actually because they were linked to the US dollar. Mine was slightly offside, but you were nicely onside come the 9 o'clock close. So all in all, a pretty good day for us yesterday. And congratulations to you, Steve.
Yeah, thanks. I'm a bit disappointed that actually when you said it's 1,000 pips, that's nothing in Bitcoin, is it? So
no, not really, no. But it sounds good.
So yeah, the risk reward management of the trade was okay, but yeah, in hindsight, if I was reminded yesterday that I was only looking to make 1,000 pips out of it, I would have definitely moved my target, and it did catapult lower. So yeah, live and
Well,
learn.
in the last 2 days, you've taken nearly 1,500 pips out of Bitcoin and 4.38R. So it's not
Oh
too
shit,
bad.
the
You're
whales
doing
will be
okay.
after me, won't they?
Yeah,
That's
and
the
you're
problem.
selling it as well. Yeah,
Yeah, no,
you
I'll
yeah.
I'll make sure I let them. I'm not going to be just like nasty with Bitcoin. I'm going to look
You're
for
only
the
selling
buying
because you want to buy at
opportunities.
lower prices, aren't you?
Exactly, exactly. Right. So shall I go again
Yeah,
today?
sure, Honor. Yeah,
The
Go
one thing
for
I
it.
was thinking about, we talked about doing, and we'll have a little bit of a further discussion to see how this works. But maybe publish our trade ideas live on our TradingView platform, so
let's do
there's
it.
a record of them straight away. Should we just do it?
You've gone to some lengths there, haven't you? That's not a gun
Well, I
to the
was
head
just doing
trade.
this.
You've just been annotating that for the last hour.
Well, no, this is what annotations are obviously in there. I leave them in there, and then I've just sort of like highlighted this, basically looking at the DAX, GRX, Euro, EUR on this, Germany 40 CFD. We had this inverse head and shoulders formation, which I picked up. It broke higher, but it failed to reach the measured move target, unfortunately. So we call that a failure. It did stall at this downward trending resistance line that we'd potential resistance line, which turned into a resistance line that we'd drawn in, and at the same time formed this other head and shoulders formation. So let me just get rid of the old one, so it sort of doesn't muddy it as much. Yep, downward trending resistant cap gains. That's true. We'll leave that one in there. And yeah, so I've seen this other head and shoulders formation, which has broken the neckline, broken lower, and it actually did break, and it retested on this bar as well. So we can call that a retest. Now, if this wasn't a gun-to-head trade, I'd still be looking to maybe sell into a rally up to 14,300, but we've got a gun to our head, so we've got to make a decision now. Have we got enough strength in this initial move? And looking at the hourly chart, we can probably see there's a potential for a bearish flag forming here. So I'm going to go with that. We've maybe rejected their potential for a bearish flag forming on the 1 hour chart. I'll pop back to the 4 hour chart because this is a chart I'll publish. And I would say selling it now, having a really tight stop. So we're selling it. Entry price is 14,140. The stop. How about the stop being there? And this gives us a 4-to-1 risk-reward ratio where we're looking to sell it and buy it back around about the 50% retracement of the entire up move that we've seen since the 7th of March. So I'm going to go ahead and publish that.
So that'll be on our TradingView profile. If
Yeah, that
anyone
should
wants to
go up
check out the
as
details,
we're speaking. Yeah.
wants to track it throughout the trading day. Okay, good luck, Steve. Jamie, what are you looking at, mate?
Well, I've been looking at the euro pairs, and we've been obviously having this longer term breakdown, and we've kind of formed these bearish flags, but I feel like I'm a little bit late to the party on these now. I was kind of looking at them at these prices and then trying to keep the stop tight, but now I think it's a bit lower. It's a little bit too difficult to get a risk reward I like. So I did have a backup, which is the China 20. Is that its official name? Which we've
50,
kind of.
isn't it?
I've
Is it
got
the Swiss
20
market you're
here.
looking at there?
Might be
Yeah, Swiss that is.
Swiss. Oh, my bad. The Swiss market then, where we've had this. We've got
Both
this
safe havens,
78.
aren't they?
Yeah, that's my bad. We've got this 78.6 fib level from this this quite long-term move down actually. So I'm using that as a target from this ascending triangle we kind of got, where we kind of initially rejected the breakout, but price seems to be now trying to push back out of it. So I'm gonna try buying this, and I'll figure out how to upload this idea in a minute. But we're gonna try buying this here. We've got about a 3-to-1 risk reward. I'm quite liking how this is looking. It kind of has been testing this key level here, and it's looking like it's breaking out now. So we'll buy it and get a little bit lower. There we go. At 12403, and I'll figure out the rest of the details in a sec because I'm gonna have to work out how to upload it. But yeah, that's what I'm gonna go for on my gun's head today.
Cool. Good luck, mate.
Thank you.
Okay, I am going to stick with euro on the downside. I know Jamie suggested it may have run away, and you may be right, but this is euro New Zealand dollar, which from the highs that we posted around February has continued to sink lower, taking out support here at 160.81. Little bit of a bounce over the last couple of sessions, but for me, it doesn't look like it's really got the legs to continue that higher. So looking at it on the intraday charts, we've got an hourly chart here. We've had a close below the 10-period exponential moving average over the last hour, which for me is always a bit of a trigger for momentum shifting in the opposite direction. We've got 38.2% fib level here at 158.07 from this swing move here. So I'm going to jump on that at 157.76. Targeting a move down to these swing lows that we posted on the 5th of April with a stop above the highs that we posted in the last couple of hours, giving me a 2.64 risk reward ratio on that one today. So I will publish that right now, and that is my gun to the head trade today.
Excellent.
Okay, so data-wise today, let's just have a quick look at what we can expect. We've got at 1:30 UK time the US jobless claims number, and that is pretty much that for this trading session. Tomorrow we have the Canadian employment report, and then we have to look forward to the week after for the next round of high impact data, and it's a pretty stacked week next week. Obviously inflation will be well watched. We've got numbers from the US and the UK next week. We've got central bank action from Canada, and also more importantly from the ECB. But it doesn't mention obviously the first round of French elections at the weekend, which will of course be important for us in Europe. Okay, that's pretty much that, gents. Anything further to add?
No, all good here.
Well, no, good for me.
Perfect. Okay, guys, we'll have a great day, and we'll see you all tomorrow.
Brilliant. Cheers.
Bye bye.
Thanks, guys.